It would seem that gold is, for more cultures, seen as a store of value and a medium of exchange. There have been places traditionally where silver has been more important. I'm thinking particularly of South Asia, and perhaps that's because of a great number of rural poor who simply can't store their wealth in something with a unit value as high as gold because they don't have enough wealth. But looking back over very long periods of time, it would seem that most cultures have used, at least as a savings mechanism, rather than a medium of exchange, gold over silver, perhaps because a fairly small amount goes a very long way with regards to savings. My own experience watching both markets is that a precious metals bull market is always led by fear. It's always a gold market. When the market gets in its later stages, that fear market gives way to a greed market, silver being more volatile to the upside than the downside. The end of a precious metals bull market, in my experience, has been that silver outperforms gold, both in terms of duration and speed. But I think that juxtaposition, which is to say that gold is a fear buyer's mechanism and silver is a greed buyer's mechanism, goes a lot to explaining the supremacy of gold over silver over time as simultaneously a store of value and a medium of exchange. I think I did a little bit in the last explanation, which is to say I believe that we're quite early on in a precious metals bull market.
Okay.
I think the first move that we saw in precious metals beginning in sort of 2016 was in effect a dead cat bounce from a way, way, way oversold market. I think the set of circumstances that Frank has described in this discussion, which I would describe as ultimately the triumph of arithmetic over narrative, means that the next bull market is in its very, very, very early stages. And I suspect that gold will lead that bull market as it has prior. But I do believe that in this sense, past its prologue, I believe that after gold has established the momentum, that silver likely will outperform it in the middle and later stretches of that bull market. But I think we're barely into that market myself. Okay. You know, Frank and I are going to reverse roles now, and I'm going to be more cynical than him. My experience has been that most gold mining company managements don't believe in gold, that most gold mining company managements are in it because their cost of capital from gold bugs, from the most naive people on the planet, their cost of capital is very low. When I talk to many gold mining company managements about their faith in the product, they have faith in telling the story so that they can acquire other mediums of exchange cheaper. But my own experience going back 40 years is that most gold mining company managements don't actually believe in their product. They believe in the process of lowering their cost of capital by using the gold narrative. I remember in my early adulthood sort of reciting my tale of woes to my grandfather, and I remember him saying to me, sort of laughing, "You know, Rick, my generation had some challenges too. The Great Depression, World War II. Y'all are going to get through this." And that's sort of how I feel. When I look out 10 years, I'm an unabashed bull. This is going to make me sound woke, which is not my intent. But the fact that over the last 40 years that we've included at least half the IQ of humankind, which is to say women, in the workforce, is a good. I continue to believe that the globalization through technology and communications mediums of people in frontier and emerging markets will generate more wealth individually than we collectively can squander. I remember telling some of my friends that despite all the flaws that the United States has, it's still a culture where 5 or 6 pimply-faced kids can take over a garage in Sunnyvale, and out pops Google or Facebook. I mean, the truth is that our individual creativity and tenacity usually can finance our collective stupidity. What's really cool now is that because of this global period of inclusion, this garage doesn't need to be in Sunnyvale. It could be in Lagos. It could be in Sao Paulo. It could be in Jakarta. So I think getting through the reckoning of the over-reliance on the collective, that we have a great and very non-Orwellian outcome in front of us. I think getting from here to there will be interesting. I'm not smart enough to know. I mean, as a consumer of currencies, I love the fact that the Russians are trying to give me a currency, and the Brits are trying to give me a currency, and the U.S. is trying to give me a currency, and a bunch of eggheads are trying to give me other currencies. I'm a consumer of currencies, so I think that's all cool. But I'm not smart enough to understand, other than the network effect, how Bitcoin might work to my benefit. So I don't own it. I wish everyone who does own it well, but it's not relevant to my plans. I'll just say that. I don't do things, at least I don't do things deliberately that I don't understand. I think, ironically, that the policies pushed by the progressives, including the Democrats, and I use progressives, of course, in quotes, are, in one sense, the oil industry's best friend. Progressive policies around the world have constrained sustaining capital investments in the oil and gas industry to the extent of $1 billion a day, $365 billion a year. In a capital-intensive business, if you constrain sustaining capital investments, you reduce productive capabilities. So ironically, in one sense, in terms of the long-term health of the oil industry, cynically, the Democrats might be better for us than the Republicans. But I certainly agree that the Republicans in the near term could cause a production rebound. And by the way, a production rebound in both Canadian and U.S. natural gas would be one of the best tools of decarbonization available to us, because you could use that natural gas to back out coal production. In fact, the developed country in the world that's gone the farthest in decarbonizing goals has been precisely the United States, the enemy of these protocols, as a consequence of shifting energy production from high sulfur generating coal to low sulfur generating gas. It's odd, the irony around people's expectation, government action, and the consequent policy responses. For a person who is speculatively inclined and willing to do the work to segregate the wheat from the chaff, the uranium subsector is probably my favorite resource sector. It's my favorite resource sector because of coming off of a very long bear market, because momentum, in a sense, isn't yet with it, and because the industry is still in liquidation. I realize that liquidation is an odd investment thesis, but it takes the global uranium business $60 a pound to make the stuff, and they sell it for $50. They lose $10 a pound 135 million times a year. Either the price of uranium goes up or the lights go out. The answer is that simple. The question hitherto has come down to time. But now I would suspect, with 55 million pounds of uranium taken out of the spot market by Sprott and the pace of Japanese restarts increasing, that the time is now. So with a caveat that it depends on how much risk the person is willing to take and how much effort they're willing to spend, I think that the sector is ripe